In this month's Economic Update, Kaplan Professional Education's Michael Pollock speaks to an industry economist about the short-term domestic and global economic outlook.
Welcome to Kaplan Professional Education's monthly Economic Update. I'm Michael Pollock, and this month we're speaking to St George Bank's senior economist, Janu. Janu, thanks for joining us.
Thanks for inviting me again, Michael.
Firstly, looking at Australia, why are non-mining sectors of the economy struggling to pick up the slack from the decline in mining investment?
Well, non-mining sectors are actually not doing too badly. We are starting to see conditions in non-mining sectors recover, particularly for services. They're above their long-run averages now, according to business surveys. Where non-mining sectors are lacking is that there aren't those signs that they're going to pick up business investment, and that's where the uncertainty lies. And that hasn't been enough to make up for that big decline we're seeing in mining investment.
What's your prediction for the movement of the Australian dollar this year?
Well, we're expecting the Aussie to trade close to 70 US cents for the first half of the year. There are downside risks to that forecast, largely from commodity prices and the global economy. Certainly if risks escalate there, then we could see the Aussie come down a bit further. But we don't expect the Aussie to come too substantially below 70 US cents, and that's largely because we think the Australian economy is holding up relatively well and well enough for the RBA to leave rates on hold. So that's going to give the Australian dollar a bit of support. What we're expecting for the end of the year is for the Aussie to be at 74 US cents. And that appreciation takes into account a gradual improvement in the Australian economy towards the end of the year.
Given ongoing weakness in commodity prices, but also downward pressure on the Australian dollar, what's the likelihood of another interest rate cut this year?
We wouldn't completely rule out another rate cut this year, particularly given the low inflation outlook. There's also those risks to the global economy as well, but it's not our core view. We're not expecting the RBA to cut rates again, and that's largely because we are seeing those signs that non-mining sectors are improving, and the labour market is also performing relatively well, and so there may not be that need for the RBA to cut rates again.
And finally, what's your overall outlook for the Australian economy this year?
We think that the next 6 months or so are still going to be a bit challenging for the Australian economy. We're still expecting growth to be below trend. The major drag on growth is going to be, of course, mining investment. That's been the big worry over the past few years, and we still see that drag continuing on. But the good news is this is probably as bad as it's going to get. That drag should begin to subside in the middle of this year. That's a big part of why we're expecting some pickup. The other reason is because the signs are there for non-mining sectors to gradually pick up some of that slack and start and investment prospects are improving for them.
Just turning to the US, some commentators have said that the recent weakness in the economy would be largely restricted to the manufacturing and export-oriented sectors. What's your view on this?
It's a reasonable view, given that, well, those sectors are the ones which are hit hardest by the stronger US dollar. There is also another sector which is probably hurting right now, that's the energy sector, thanks to the falling oil price. But the US economy does seem as though it's in reasonably good shape. It's still adding jobs at a healthy rate. There are really good chances that the unemployment rate's going to continue to fall. So I think things are looking quite good, still quite good for the US economy.
When do you expect the Fed to increase rates again, given share market volatility and persistent weakness in oil prices?
We have penciled in the next rate rise to occur in March, but if this volatility does occur and we do see the oil price still at these extremely low levels, then there's a good chance that that could be pushed out till later in the year.
And what will be the drivers of the US economy throughout this year?
Well, those sectors outside of manufacturing and energy we think that housing, consumer spending and services, those are sectors which will probably help support the US economy going forward.
Okay, so looking at China, what do you make of the renewed concerns about softening of the economy?
Some of these concerns about China, they've been there for a long time. We know that Chinese growth is softening and it is going through this transition. I think where some of the renewed concerns have come from simply related to the share market moves and the moves in the currency, and the questions are really around the authorities' ability to manage this transition towards a more market-based financial markets, liberalising its financial markets. That's where I think some of these recent concerns have emerged. On the economy itself, I think that they're managing it reasonably well. We know it's softening, but it's not softening from, it's not likely to soften to a very soft pace. We're expecting maybe at least 6.5% growth, mid 6% growth this year. That's still very good, and it's still going to add a lot to demand. It's just, well, we're not looking at double digits anymore, and as China gets bigger and bigger, yeah, it does come from a larger base.
And what's your overall outlook for China in 2016, given the strong trade figures but subdued share market and falling currency?
Well, some of these challenges that China is facing, they're likely to continue on throughout this year. But we're reasonably optimistic for China. We still think that growth will continue to slow this year. Last year it grew at nearly 7%, and this year we're estimating it will grow mid 6%. That's still a very strong pace of growth, and that's still going to add substantially to global GDP. We'll just have to see how well authorities handle this, I suppose, the financial markets and moving to liberalise them.
So what's your view on the process of economic liberalisation?
It's tricky because you know that authorities, they want to exert control over it, and in the meantime there will be that volatility in between. Say for example the share market, the investors there are just not going to be as sophisticated as they would be in Australia, for example. It's just not as mature, so you will get these large swings. It just needs to find a level, and the government maybe needs to hold back on meddling with that.
Okay, and finally to Europe, to what extent do weak oil prices and the need for price stability point to further QE in the region this year?
I think expanding the QE program seems a very likely prospect for the ECB. They have done a little bit towards the end of last year, and I think the expectation is that they could do more. That there are hurdles for the ECB in comparison to, say, the US, just because by expanding QE they don't have as big a market just to draw from. The US has a massive treasury market to purchase, whereas the ECB, they need to purchase government bonds from all different countries. It's just not as straightforward. It's just not as big a market. So I think that's what's holding them back. Also, I think they do have another instrument called the deposit rate, which is now in negative territory. They have talked about that going further into negative territory. So that's one of the other tools that the ECB could adopt.
And what are your expectations overall for the European economy in 2016?
I think the European economy will continue to grow, but still at a soft pace. Probably we think that European economy can do better than what many out there are predicting. QE does do something, and they have put in a whole range of monetary stimulus measures, and they do have some impact. One of the big supportive factors for Europe is going to be the weak euro, and I think we can already see some evidence of that through Germany.
Thanks very much, Janu.
Thanks for having me, Michael.